Ira Epstein of Linn Associates with your agriculture review, and this is for the weekend of September 27th, Friday, 2019. Now, in the weekend review, we do things a little different. We're going to first look at a monthly chart, and then all the other charts are going to be of the week's action. So it gets interesting. Crazy week, as you know, lots going on. I wouldn't even know where to begin on half of it. My financial video, I'm trying to give you more information, but you got an impeachment going. Today, late in the afternoon, they just subpoenaed Secretary of State Pompeo. You've got threats to delist Chinese companies. You've got threats to, and I'm talking from the U.S. stock exchanges. You've got threats of maybe pension plans shouldn't invest in Chinese companies. There's just so much going on. But a lot of it, just understand, a lot of it is posturing to get trade deals done. October 10th, for those of you that are in the grain markets, that is when the Chinese delegation comes to the U.S. Now, October 15th is when the next round of tariffs are supposed to go on. You'll get a real good idea if it's going well, are those tariffs going to go on October 15th or not once the Chinese delegation gets here. I'm assuming they'll come, but with all that's going on, you just don't know. When we look at a monthly area chart of closes, the resistance has been the 18-month moving average of closes at 890 3/4. I say it has been because when a market gets under an 18-month moving average, what you're looking at is that does it stay under it? If it does, it means your bias is down, and you can see you haven't even come up to hit that since 2018. So the question is, what happens right here? When you take a look at the weekly bars, you can see how the market made a bottom for itself at 840, something of a top near the 920 level, and it's just meandering back and forth in there. And in the process, we do have an uptrend. We have a pattern of higher lows and we have higher highs. I define that as an uptrend. The market is also trading over the 18-week moving average of closes, which is 876 1/4. If the market pulls back here, I wouldn't be surprised that that's the number the market first tries to grab footing at on a pullback. We finished the week out at 883. It's only 13, well, what is 883? 7 cents away. So it's literally right in the ballpark. What about resistance? We see one resistance point at the 100-week moving average of closes, and the Bollinger Band was with it. We haven't gotten up to a resistance point. In fact, you haven't been at a resistance point since last year when you hit the upper Bollinger Band here, and you have stayed under the 100-week average all the way. You have to go back to May of a year ago, not this past May, of a year ago, and that's when the market got under it. When you look at momentum, it's up. So we have, by the way I define it, higher lows, higher highs, support 876 1/4. If you break the support line, if you break 843, you break the pattern of higher lows, higher highs. So I wouldn't be surprised to see that the trade is trying to find support in this market down there. In the meal market, the picture's different. And often meal is the leader in the bean complex, and the fact that it's staying under the 18-week average has me concerned. Number one, it takes away a lot of my bean bullishness right away. Number two, I'm looking at momentum pointing down and bias down. I have a market that's got a higher high and a lower low pattern, and it's consistently staying under that 18-week average with momentum down. I'd call this market, the bias and momentum are ruling the day right now. You'd have to get over 302.50 on a closing basis to change the pattern. And if that happened this week, I think you'd be suddenly into the bull camp looking for possibly big moves up. What would make that happen? Well, certainly hearing trade talk about pork and beans, and we've been hearing that now for 2 weeks as the Chinese are saying they want to buy more pork from the U.S., and they have been buying, not going to, they have been buying our soybeans. Soy oil ran into resistance at the 100-day average, challenged it once, fell right back into the Bollinger Band. It got up right here over it. Now, what are the odds of staying over these black bands or under them? Only 5% of the time do you do that. So anytime you're there, you're typically either looking for a market to begin a run, like it's done here, and I always look to see what momentum is doing with it. Is it agreeing? In this case, you can see momentum was not pointing up, price went up, and then right back, and momentum joins into the parade of the correction. So support is here at 28.33. Take out 28.10, you lose that. In fact, you go to a neutral chart. We'll see if that can hold. In the corn market, the 100-week average was resistance last week, and it's resistance this week. Here's something that I teach and you often see. When I'm looking for support at the 100-day average and it doesn't show up, like right here, then as it comes back to that number eventually, instead of saying, well, it didn't work on the way down, it's not going to work on the way up, I've learned that's not true. I find that more times than not, it actually does become a stall point. It's the thrust here, but the reactionary bounce, and that's what you're in, a reactionary bounce. It's holding. You've got lower highs. That's bearish. Lower lows with it. Momentum is flat and the bias is down. So far, I don't see anything friendly on that chart. In the wheat, I see a non-trending chart. You ended the downtrend when we took out right here, when the market, this was the downtrend. If you take out that high, you break the pattern of lower highs, lower lows. Where did the market go to? The first moving average, the 100, that acted as resistance. Could get back to the 18. Here your bounce up last week, didn't make it, and you're back to that 100, just sort of hanging there. Momentum, trying to actually move up. Bias down, no trend. Cocoa market, higher lows, higher highs, got up, fought a bit of a battle here at the 100-week average. You can see how the market fought here, came back. Next, the 18, you slice through it and you're still going. Don't know where it's going to end, but this market is still in the bull camp. Support two areas here, 23.70 to 22.93. Sugar market, longer term is still bearish. You've still got lower highs, lower lows. Look at how this 18-week average has become an important number through here. Now, let's assume you get through this 1196 area. Well, what can happen then is you knock out the bear trend, and you got up to 1186 this week. You knock out that. Maybe you put into play these numbers, 1244 to 1280. The problem is, to do that, you still have the lower low, higher high. I would think better chart action is needed. Keep this in mind. You've lost your downside momentum. Momentum often leads price. In the coffee market, uptrend on the weekly charts. Higher lows, higher highs. You closed over the 18-week. The daily chart was fighting a battle too, and it resolved to the upside. You'd have to take out 96.85 in order to say, nah, this market used its upside momentum up and it's going nowhere. Right now, the bulls have control, and I'm assuming that the 18-week average is the support zone. In the cotton market, cotton stepped out of its downtrend. It did this back here. Got up to that 18-week average, broke the pattern of lower highs, lower lows. Momentum had turned with it. Not in an uptrend, still under the 18-week average, pulled back, and this week you're still like this. I thought this market would fall more. It didn't. Then we get to the cattle market, which, as you can see, is back right into this resistance area. This week's high is 105.25. The last rally high we had was 105.95, and you've been in this bear trend. Problem is you have hit your downside targets. You hit them with momentum down. Now momentum's turning up. This market is right now in a battle zone. Where are we going to go? Hog market. We had the pig crop report come out today. What I'm looking at is the size of the litters. And we keep expanding the size of these litters, and the hog population is not falling off. What this market needs, if it's going to get itself going at all, is it needs the Chinese deal. Without that, and they're buying all over the world but from the U.S. If they start buying from the U.S., this could become a base for the market. Right now, what is the trend? Down. You still have the lower highs. You have the lower lows. You could argue that you're triple bottoming here, or double bottoming, and momentum is flattened out on you. It'll be interesting to see how the market starts this coming week. First reaction to the pig crop report. Second, the market will quickly look over its shoulder and wonder if all this talk this week that we just had with not putting money into the Chinese stock market, what does that do for these trade negotiations? That is going to be a big concern for traders. I want to remind you, if you're like me, I question myself an awful lot. I find that you wake up, you're looking at the market one way, the other. Do I want to buy? Do I want to sell? A lot of what I do, by the way, you can watch on your mobile phone, because I make videos first thing in the morning. And these are not the ones you're looking at here. This is on YouTube and many other websites. I am talking about the one just for my subscribers, where I give you my trade ideas right there. I start recording at about 6 a.m. each morning. I make a video that's covering 40 futures markets, 5 ETFs. I'm going to prep you first thing in the morning for the fundamentals that are coming out. Then we're going to go into technical analysis different than I do here. I am going to say, I want you to buy here. I want you to sell there. Here's where I'm right. Here's where I'm wrong. And I am going to be wrong. Nobody walks on water. I'm also going to be right, luckily. But you're going to get a picture of this, and the charts are a complete different look to them. First of all, different background. Second, more studies. Third, I can show you more things because I'm not pressed for time in any manner. We're going to, of course, have the slow stochastic, a lot of moving averages. And, of course, we're going to use some of the other tools that I have. From time to time, I'll use pivot points with you and so on, giving you an idea of what the markets are doing. So if that could be something that you'd like, and you're interested in these different sectors, you don't have to look at them all. Let's assume you wanted to jump right off the bat to the energy market. What's going on? You grab the slider, and as you pull it, the different names will pop up right in front. You're there. Or you go to the lexicon on the side, hit energies, it'll take you there. You don't have to look at the whole video. You look at what you want, or you can look at the whole video. Typically, the video is about 15 to 20 minutes long in the mornings. The cost of it, $7.95 for 30 days. After the 30 days, if you like what you see, you continue at either $15 per 30 days, or you can buy 1 year up front, and that's $156. Any way you cut it. When you're looking at what's going on in there, a corn tick is how much, my friends? $12.50 a tick. I'm throwing out this at $7.95 for the 30 days. I think you'll get your money's worth. Plus, I do special reports and so on, so I think you'll find it fascinating. How do you get this? Simply go to our website, go under research, and under the word research, morning subscriber video, read about it, and that's where you sign up right then and there. You can also get there by clicking here. It'll take you right to it. I'm Ira Epstein. You have a great weekend. I'll see you